Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. The next big hit, stock splits. Tesla and GameStop become the latest big brands to announce that they will be cutting their stocks into bits. Is this a sign that another market rally is just around the corner? Altcoin Attractions. WisdomTree launches ETPs for DOT, SOL and ADA, while the CME considers listing SOL and ADA futures. Which Ethereum killer do institutions want the most? Bitcoin mining milestones. Bitcoin's hash rate hits a new all-time high with 2 million BTC left to mine. Why these milestones are more significant than you think. Terra's BTC Buys. Terra's Lunar Foundation Guard loads up on over $1.4 billion of BTC to back UST. How much more is it planning to buy, and how will UST's BTC backing work? Axie Infinity attacked. Over $600 million in crypto is clipped from Axie Infinity's Ronin sidechain. What does it mean for AXS and RON in the short term and long term? Russia demands rubles. The Kremlin reportedly cuts off gas to Germany as Russia's central bank reportedly moves towards a gold standard. Where could this conflict end? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, Tesla and GameStop announced they would be splitting their stocks. As the term suggests, a stock split essentially involves dividing a company's shares by some amount without changing its market cap. For example, Tesla had a 5-to-1 stock split in 2020. This means each Tesla share was divided by 5. The 5 new shares of Tesla stock were therefore worth 1 old Tesla share, with the combined value of all the new shares staying the same as before. Stock splits are analogous to coin or token redenomination in cryptocurrency, and in both cases the goal is the same, and that's to create a lower price tag. The reasoning is that investors, particularly retail investors, will perceive the stock or crypto as having more potential when it has a lower price tag, even though this is something that's determined by market cap. Fortunately for crypto projects and meme stock companies, however, the average retail investor isn't aware of this. And it's not just Tesla and GameStop who are splitting their stocks either. Last month, Amazon announced it would also be splitting its stock, and in February, Google announced that it would be doing the same. Historical data suggests that stock splits are followed by a massive rally, and though this doesn't necessarily mean we'll see the same thing this time around, there is historical precedent for it. Besides the fact that Tesla and GameStop are both involved in the crypto industry, Bitcoin's recent record-high correlation with the stock market means that any big moves there are likely to translate to even bigger gains in the crypto market. When you combine this with the historical data that shows the spring months tend to be massive for the crypto market, and the rumor that Apple Pay will be announcing an integration with Bitcoin's Lightning Network at this week's Bitcoin conference in Miami, you have a recipe for some spicy price action. Now, if you happen to be curious about which publicly traded companies are buying Bitcoin, you can check out my video about that using the link in the description. Now, while most of this potentially positive market momentum is likely to move into BTC, it looks like alt season has come early this year, and this time the institutions are feeling the FOMO too. For starters, there's the American ETF provider WisdomTree, which recently listed exchange-traded products on European stock exchanges for Solana, Cardano, and Polkadot. This is a big deal because WisdomTree's ETPs are physically backed, meaning WisdomTree will be buying and selling actual SOL, ADA, and DOT to back their ETP shares based on demand. This is in stark contrast to what the Chicago Mercantile Exchange, or CME, is considering, and that's futures contracts for Cardano and Solana. This won't see the CME buy any actual ADA or SOL, but instead allow institutional investors to speculate on whether their prices will go up or down using pure paper fiat. For those who don't know, the futures Bitcoin ETFs we saw approved last year are backed by CME Bitcoin futures contracts, and the listing of CME's Bitcoin futures in 2017 actually marked the top of the previous bull market. This is why I personally believe that the listing of a spot Bitcoin ETF will mark the top of this current bull market, and why the CME's listing of Ethereum futures last February is a sign that we could see a futures Ethereum ETF too. Logically, this means that the CME's listing of Cardano and/or Solana futures opens the door to an ETF of some kind for ADA and SOL in the future. According to Decrypt, the only thing stopping the CME from listing Cardano or Solana futures is a lack of regulatory clarity, as well as a bit of concern around reliable pricing feeds from centralized exchanges. I guess they've never heard of Chainlink. Now, in the meantime, institutional investors can get exposure to ADA and SOL via Grayscale's trusts, and the composition of its recently listed smart contract platform fund sheds light on how much institutional demand there is for Solana, Cardano, Polkadot, and other so-called Ethereum killers. Funnily enough, it looks like Solana and Cardano are almost equally favored among institutions, with 27% of the trust being allocated to the former and more than 25% of the trust being allocated to the latter. Avalanche and Polkadot place third and fourth at just shy of 17% and 14% respectively. This is consistent with recent research by crypto analytics company Into the Block, which found that the volume of ADA transactions worth more than $100,000 has grown by 50x since the start of the year. If you want my most recent deep dive on Cardano, you can find it, of course, in the description. Anyways, as amazing as these altcoin indicators are, it's important to remember that basically every altcoin remains heavily correlated to Bitcoin. As it so happens, Bitcoin has been seeing its fair share of bullish indicators too, and most of these can be found on-chain. First, there's the Bitcoin hash rate, which continues to trend higher. For those unfamiliar, hash rate is essentially a measure of how much computing power is connected to the Bitcoin blockchain. Bitcoin's hash rate has historically correlated quite closely with BTC's price, hence why this indicator is so significant. It suggests that new all-time highs are coming for BTC too. Behind the scenes, Bitcoin miners have been raising hundreds of millions of dollars to expand their operations, and a crypto mining company called PrimeBlock recently announced that it will be going public, i.e. listing its shares on stock exchanges, via a special purpose acquisition company, or SPAC. This investment is all thanks to the impressive economics of BTC, which caps its maximum supply at 21 million and reduces its issuance every 4 years in an event known as the halving. As basic economics dictates, if supply is reduced while demand stays the same or increases, then the price of the asset goes up. Bitcoin's halving cycle is believed to be behind not just BTC's rise, but the entire crypto market cycle, which seems to consist of 2 to 3 years of bull, followed by 1 to 2 years of bear. With just 2 million BTC left to mine, you might be wondering how long Bitcoin has before all the mining rewards run out. Well, most sources suggest that the last BTC won't be mined until sometime in 2140. Now, this is interesting because the US dollar is likely to no longer be the world's reserve currency sometime in 2040, as per the average lifespan of world reserve currencies, which is 100 years. As I mentioned in yesterday's video, it looks like central banks could soon begin holding BTC on their balance sheets as part of their currency diversification strategy, and this means it's quite possible that BTC could someday become the world's reserve currency. As I mentioned in yesterday's crypto news update on Instagram, it's long been speculated that Satoshi Nakamoto chose a maximum supply of 21 million BTC for mathematical reasons. But I find it peculiar that the 2140 date lines up almost perfectly with when the next world reserve currency's reign will end. Now, this is likely nothing more than a coincidence, but it could also have been a conscious effort by Satoshi to position Bitcoin as the world's next reserve currency. The real question is what happens when the last BTC is mined, and you can find out all about that using the link in the description. Anyhow, speculation about Bitcoin's role as a world reserve currency could become a reality sooner rather than later if Terra's BTC experiment is successful. In case you missed the memo, Terra is in the process of accumulating $10 billion of BTC, an initiative that's been kickstarted by the Lunar Foundation Guard, the recently incorporated non-profit that coordinates Terra's development. I suppose some context is required here. As some of you will know, Terra's shtick is decentralized stablecoins, the most popular of which is the dollar-pegged UST. Terra's stablecoins are collateralized by Luna using a novel mint and burn mechanism where one UST can always be burned to mint $1 worth of Luna and vice versa. This mechanism incentivizes arbitrage traders to buy and burn UST when it falls below its peg to mint $1 worth of Luna, thereby reducing UST's supply and restoring the peg. The opposite process occurs when UST is pushed above its peg. Now, naturally, this economic model works pretty well when the crypto market is pumping. Demand for UST is high, and this pushes UST above its peg. This incentivizes arbitrage traders to buy and burn Luna to mint more UST, which gives them a quick profit and pumps Luna's price. However, if there was ever a catastrophic crash in the crypto market, like we saw at the start of the pandemic, Terra's economic model could implode. This is because demand for UST would fall, dropping it below its $1 peg, incentivizing arbitrage traders to mint Luna, which they would immediately sell because the crypto market is crashing. Luna's continued crash would cause UST holders to sell more aggressively, dropping its peg again, and so on. This is called a death spiral. It's an unfortunate fate that many decentralized stablecoins have faced in the past, and it's one that Terra wants to avoid by creating a massive stability reserve consisting of $10 billion of BTC and eventually other cryptocurrencies. So far, the Lunar Foundation Guard has accumulated over $1.4 billion in BTC in a multi-sig Bitcoin wallet custodied by the Foundation's members. Terra co-founder Do Kwon recently explained that they have roughly $1.5 billion of dry powder left to buy BTC. After that, the Terra protocol itself will begin allocating a portion of UST minting fees towards buying BTC at a rate that has yet to be decided by the Terra community, but is being actively discussed in Terra's governance forum. Once Terra's recurring BTC buys have been put in place, the Lunar Foundation Guard will create a special decentralized exchange, where it will be possible to get 1 UST by depositing $1 worth of BTC and redeem 1 UST for slightly less than $1 worth of BTC. This is for reasons I won't go into here. If and when the crypto market sees a massive crash, rational UST holders will opt to redeem their UST for BTC rather than Luna, since it's pristine collateral, so to speak. This takes a substantial amount of sell pressure off of Luna, which should theoretically prevent a death spiral. The end result will be a decentralized stablecoin that's partially collateralized by the best collateral in crypto, and many in the crypto community are seeing Terra's experiment as the first step towards creating a truly decentralized digital gold standard. Obviously, all the BTC buys that we're going to see in the interim are going to push up its price, particularly the remaining $125 million per day buys by the LFG. When it comes to Luna, it's a bit too soon to say, but the increased confidence in UST these buys will create will likely lead to more demand for UST and Luna by extension. You can find out what else Terra has in the works by watching my recent update about the project, and that's in the description. Anywho, as terrific as Terra's plan sounds, inquisitive crypto investigators such as Laura Shin are concerned about any potential exploits of the trustless cross-chain bridge to Bitcoin that Terra will need to build to make its UST BTC backing possible. Ethereum creator Vitalik Buterin also warned about the unforeseen security risks of cross-chain bridges in January, shortly before Solana's wormhole bridge to Ethereum was hacked for over $300 million in February. If you think that's a lot, you probably haven't heard about the Poly network hack, which saw over $600 million of crypto stolen in a cross-chain heist. Luckily, the hacker returned the funds shortly afterwards, presumably because he or she realized that it's not easy to cash out that kind of crypto. Poly Network held the record for the largest hack by dollar value until last week, when the bridge from Ethereum to Axie Infinity's Ronin sidechain was successfully exploited for a staggering $625 million in crypto. Unlike the Poly Network hacker, the Axie Infinity hacker apparently isn't responding to Ronin's desperate developers because on-chain analysis reveals they're still actively trying to cash out their ill-gotten gains. I'll leave a link to their Ethereum wallet in the description. Now, if you're wondering how the hell this happened, the short answer is centralization. Ronin only has 9 validators, 4 of which are run by Sky Mavis, the company behind Axie Infinity and Ronin. Because the multi-sig wallet for the Ronin bridge requires 5 of 9 validators to sign a transaction, all the hacker had to do was hack Sky Mavis plus 1 additional validator. So that's exactly what they did. Then they signed a transaction sending all the crypto in the bridge wallet to their personal wallet. Now, in terms of what this means for Axie Infinity's AXS token and Ronin's Roncoin, Sky Mavis has promised to ensure the stolen crypto is, quote, recovered or reimbursed. Given that the hacker doesn't seem to want to play ball, Sky Mavis and its affiliate might have to start selling its share of AXS to cover the cost, and that could do serious damage to its price. Then again, if it does come to that point, it's likely that Sky Mavis will stick to selling all that AXS over the counter directly to crypto VCs that believe in the project. If they're lucky, they might get a full-on bailout from a crypto VC the same way Wormhole did. Make no mistake, however, if Sky Mavis can resolve this situation and take the steps required to ensure it never happens again, AXS and RON could recover and reach new all-time highs in the long term. You can find out what else has been going on with Axie Infinity by checking out my most recent update about the project using the link in the description. Now, I know some of you are probably sick of hearing about Russia and Ukraine by now, but trust me when I say that you need to be paying attention to what's going on because this conflict affects us all. Case in point, Russia has reportedly stopped shipping gas to Germany, and many economic analysts believe a recession could now be imminent in Europe's largest economy, which will almost certainly spill over to the rest of the world. Before any European viewers panic, however, there are actually dozens of other oil and gas pipelines that run from Russia to other European countries. Germany reportedly has a month of reserves on hand, and it seems to be the only country in the crosshairs, at least for now. Russia's refusal to supply Germany with gas seems to be rooted in its demand that hostile countries pay for Russia's resources in rubles by April the 1st, or else. As many analysts have pointed out, the point of this demand is to prop up the Russian ruble, whose value collapsed because of sanctions imposed on Russia. Oddly enough, it appears that this has already been happening for quite some time because the Russian government has been using the euros and dollars it's been getting to buy rubles. If you read beyond the headlines about this issue, you'll see that what Russia wants is for these so-called hostile countries to create ruble-denominated bank accounts in Russia to pay for oil and gas and convert the currencies themselves. In short, it's almost the same thing that's happening now. Even so, European countries aren't too keen on bending the knee to Russia's requests, and we might very well see similar announcements for other European countries made this week. If that happens, make no mistake, inflation will accelerate all around the world. Inflation is something Russia is intimately familiar with these days, and were it not for the unprecedented capital controls and interest rates put in place by Russia's central bank, the Russian ruble could have become Russian ruble. Another reason why this didn't happen was the continued purchase of gold by Russia's central bank, something that accelerated last week with the announcement that it would be purchasing gold from domestic banks at a fixed rate in rubles. Some precious metals traders and forex analysts actually believe that the Russian central bank's move to buy gold at fixed rate is why the ruble recovered against the US dollar. The move has also led to speculation that Russia is looking to back the ruble with gold and other commodities. Russian officials have even stated that they're willing to accept gold as payment for oil and gas from unfriendly countries in lieu of rubles. Not surprisingly, the United States responded by banning all individuals and institutions in the country from buying or selling gold to Russia's central bank directly or by proxy in any way, shape, or form. Now, whether these sanctions will have any meaningful effect remains to be seen, but one thing's for sure, they're creating collateral damage for the average person both inside and outside of Russia. More about that in the description. Turning to the charts, we can see that BTC has entered a price pocket between the 200-day moving average and the 128-day moving average. If you watched my video about swing trading, you'll know the 128-day moving average has been a significant zone of price support and resistance for BTC, and we saw it come in to save BTC when it suddenly dipped last week. It looks like BTC is painting a bit of a bear flag on the daily, but with the long-term price in an uptrend and the Bitcoin conference coming up, I have a feeling this pattern won't play out. If it does, we'll probably bounce off the 128-day moving average at around 44K. This week's winners are StepN, Moonbeam, Scale Network, Waves, and Aave. StepN seems to be a fairly new crypto project on the Binance Smart Chain. As far as I understand, it's a sort of play-to-earn game where you can earn the GMT token for jogging or running outside. This GMT can then be used to, quote, level up and mint new NFT trainers. Sounds pretty cool, to be honest. Now, StepN's GMT token has pumped quite a bit, but is already seeing signs of a healthy pullback. It could drop as low as $2 before it sees another rally, but there isn't enough price history to make a clear call here. Next up is Moonbeam, and some of you will know that it's an Ethereum-compatible parachain on Polkadot. I couldn't pin down exactly what's causing Glimmer's pump, but I could swear I read an article or post about a proposal to launch Uniswap on Moonbeam. A Uniswap launch would certainly be welcome given the state of Glimmer's long-term price action. I'll be doing a longer-form review of Moonbeam later this week, so keep your eyes peeled for that. As for Scale Network, the SKL token has taken a trip to the moon because of the upcoming release of Scale's V2 scaling solution for Ethereum. A blog post about it was published last Friday, and I'll leave it in the description if you're interested. SKL is currently seeing a serious correction, which is not surprising given that this was a purely speculative pump. It looks like it'll settle around 23 cents before trying to break that 34-cent zone of resistance again. And last but not least, we have Aave, which has been rallying ever since the V3 version of its DeFi lending and borrowing protocol was released in mid-March. I reckon there's been an increase in lending and borrowing because of the recent rally as well. As epic as Aave's pump has been, it's still a far cry from its all-time high and faces a lot, and I mean a lot, of resistance on that road. I still believe in Aave though, and I strongly recommend you check out my video about the project using the link in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. With the crypto market rallying like it is, it's wise to make the most of it, and you can do exactly that while supporting the channel by checking out my deals page. That's down in the description. Thank you so much for watching, folks, and I'll see you all in next week's episode.